Right now, somewhere, someone is patting themselves on the back for keeping a stable, comfortable job for the past 7 years, and they have no idea it just cost them over $400,000. I'm Grace, and today we're putting a dollar figure on something almost nobody calculates: the ongoing financial penalty of playing it safe for too long. Comfort feels like stability, but in a fast-moving economy, stability that isn't earned every year is really just slow-motion decline. We're going to break down 5 specific ways your comfort zone is quietly draining your lifetime wealth. Every year you stay still, you're making a choice. You just usually don't feel it until much later. Let's start with the most measurable cost: salary stagnation. The average annual raise for someone who stays in the same role hovers around 3 to 5%. That barely beats inflation in most years. But someone who changes roles or companies every 3 to 4 years has historically seen salary jumps of 10 to 20% each time. Even in a cooler job market, the gap is real and consistent. Run those numbers over a decade, starting at $60,000. The comfort zone path lands you around $73,000 at 2 to 3%. The growth path, at 8% average, including periodic role changes, lands you closer to $130,000. That is a cumulative income gap of nearly $300,000 over 10 years, not from one dramatic decision, but from a single pattern repeated passively, year after year. There is a trap career coaches call the one-year trap. You have not accumulated 5 years of experience. You have accumulated 1 year of experience 5 times. Same tasks, same ceiling, same blind spots. That distinction matters enormously when you are negotiating your next salary. And that's before we even factor in what happens to your skills while you're standing still. Human capital is the financial term for the economic value of your skills, knowledge, and experience. And just like physical assets, it depreciates. The World Economic Forum's Future of Jobs Report 2025 found that nearly 40% of all core job skills will need to change by 2030, driven by AI and automation. That is not a distant prediction. That is 5 years away. If you are not actively updating your skill set, your current expertise is losing real market value, quietly, continuously, every quarter. The workers who feel most blindsided by layoffs are almost always the ones who stopped investing in themselves years before the pink slip arrived. Recruiters see this constantly. 2 candidates with the same years of experience, but one has been compounding their skills and one has been coasting. The skills compounder commands a starting offer $15,000 to $25,000 higher. And when the safe job disappears, through layoffs, automation, or restructuring, the candidate who never diversified their skill set is the one scrambling. Now let's talk about the money that never got made, because that is where the real invisible cost lives. Opportunity cost is the cost of the path not taken, and it compounds. Model this out. Someone who starts a side business at 28, generating $25,000 per year by year 3, and reinvests that at 7% average annual returns, arrives at 60 with roughly $1.1 million in additional wealth. Someone who simply negotiates a better role and invests the $20,000 income difference over the same period, around $800,000 more. The person who stayed comfortable? They get to keep their comfort zone and a retirement that looks nothing like what they planned. The comfort zone mindset doesn't stay in your career. It migrates directly into your financial habits. The same person avoiding a difficult job change is often also making minimum debt payments, keeping emergency funds in a 0.5% savings account, and avoiding any investment that feels unfamiliar. Minimum payments on $15,000 of credit card debt at 20% APR costs you over $11,000 in interest over 5 years alone, versus aggressive payoff that could have cleared it in under 18 months. Comfort in every financial decision carries a price tag. And all of those choices eventually arrive at the same destination. This is where it all lands. 2 workers, same starting salary at 25, same savings rate of 15%. Worker A takes career risks, new roles, new industries, continuous skill investment, and grows income at 8% per year. Worker B stays comfortable at 2% annual raises. By 65, Worker A's 401k sits at approximately $2.8 million. Worker B's sits at roughly $900,000. That is nearly a $2 million gap, not from one dramatic decision, but from decades of small, quiet choices to stay comfortable. So, what do you actually do with this? 5 moves. First, negotiate or change roles every 2 to 3 years. Treat 10 to 15% salary growth as the minimum target, not a gift. Second, invest 20 minutes per day in a skill that is growing in market value. Third, run one income experiment per year, a side project, a consulting engagement, a new investment vehicle. Fourth, attack your highest interest debt aggressively, not on the bank's schedule. Fifth, diversify beyond your default retirement fund into index funds, real estate investment trusts, or other assets your current comfort zone has kept you away from. The goal isn't to chase risk for its own sake. It's to stop paying a tax you never even agreed to. Let's land this. The comfort zone is not free. Stagnant earnings can cost you $300,000 or more over a decade. Neglected skills accelerate your displacement risk as AI reshapes entire industries. Avoided income experiments and investment diversification can quietly erase $1 million of lifetime wealth. Financial habit complacency keeps you in debt longer and earning less on your savings. And a lifetime of small, safe choices can produce a $2 million retirement gap. The question isn't whether you can afford to push your comfort zone, it's whether you can afford not to. Drop a comment below. What is one comfort zone you have been meaning to break out of? If this gave you something to think about, subscribe and turn on notifications. New videos every week.